Hi everyone, welcome to the Optimized Wealth series. I'm Clark Bellin, president of Bellwether Wealth, and today I just wanted to talk a little bit about 2025 and review some lessons we could take from the market. What were the biggest drivers of 2025? Really, probably the biggest driver, if you really want to take a big step back, is sort of look at the market as this big push and pull that we sort of experienced throughout the year. We had a lot of headlines that kind of came out and really kind of caused emotions to run really hot and really fast. And later on, as we kind of let those headlines play out, we sort of found out that some of them weren't as important as we thought they were going to be. So, on the one hand, the economy kind of held up better than some people thought with a lot of the announcements that were coming out of Washington. On the other hand, we had interest rates stay a little bit higher than we kind of originally thought they were going to, but we did recently have some lowering of interest rates just last week, with some forecasting into maybe some more lowering of interest rates as 2026 kind of plays out a little bit. But markets were constantly sort of adjusting to expectations over the course of the year. So as the year played on, investors sort of became a little bit immune to some of the headlines. And we also started to see investors sort of shift more towards digging in and looking at some of the fundamentals of some of the companies that they were investing in. We saw companies that used to just have kind of big announcements or big expectations would sort of be where the money sort of flowed to. And we saw some of that kind of back off here in the last quarter or so. We saw people started going back to more traditional investments where they analyzed their balance sheets, their return on equity, and we saw dollars kind of pointing to some of that. So what worked for this year? What really worked for this year were those that sort of ignored the headlines and focused on the data, and they stuck to their original game plan. We saw investors that did their reallocation on a systematic basis and then did real analysis on their portfolios and held tight to their plans. They tended to fare better than those that sort of chased headlines and let some of their emotions get the best of them and make sort of irrational decisions at the wrong time. One key takeaway for long-term investors this year, and I think this is going to be true kind of going forward for a while, is that volatility is normal. Just because we have volatility in the markets doesn't mean that the market is broken. We just have seen or become kind of immune, or immune's not the word, we've been kind of accustomed to seeing very short ranges of rates of return in the market for the past several years. And this year, given again the headlines and some of the things that were coming out, we saw volatility kind of get stretched a little bit more, and that's typical of equity markets. So I think volatility is going to be here to stay for a while. People can't really time the market. They just need to kind of be patient and make strategic decisions based off of data and based off of proper investigations versus letting the headlines and the emotions sort of drive things. I look at 2026 right now, and I kind of see 2026 sort of being a little bit of a repeat of 2025. I don't see anything out there right now that causes great concern to have the markets have a tremendous pullback. But again, we may see the markets deliver more muted returns that people have become accustomed to. We may see high single-digit returns for the market versus these large double-digit returns that people felt like they've been used to getting. And that may cause some investors to feel like they got punched in the gut, even though that's more normal of equity market returns to be high single digits or really low double digits. But currently what we see kind of coming out down the pike for 2026 looks pretty good. And again, I think people that just stick to the game plan and continue to use data to make their investment decisions are going to fare much better than those that turn around and use emotion or headlines to make their decisions. So that's sort of a recap of 2025 and what worked, and also kind of a sneak peek into how I think 2026 is going to play out. I appreciate you taking the time in these few minutes to watch this episode of the Optimized Wealth series. Again, I'm Clark Bellin. Thank you.